Between 1991 and 2008, one man promised something that Wall Street itself could never deliver. Guaranteed returns, 12% every single year. No matter how the markets moved, no matter if the economy crashed. 4,900 investors believed him, and they gave him $65 billion. His name was Bernard Madoff, and he would become the architect of history's largest financial fraud. This is the $65 billion lie.
Bernard Madoff
Wasn't a criminal mastermind. He was a stockbroker. Born in 1938 in Queens, New York, his father was an electrician. By the 1960s, Madoff had built a legitimate brokerage business. By the 1970s, he was on the board of NASDAQ itself. He was trusted, respected, a pillar of Wall Street.
But in the early 1990s,
Something changed. Madoff created what he called a consulting business, a private investment fund, closed to the public, for the wealthy only. He promised to manage their money with a trading strategy so sophisticated, so profitable, that it could guarantee 12% returns every year, like clockwork.
investors who heard about it
Were desperate to get in. Getting into Madoff's fund became a privilege, a status symbol, an exclusive club for the ultra-wealthy.
Here's how it worked.
Client A deposits $1 million. Madoff doesn't invest it in the market. Instead, he creates a fake statement. It shows that $1 million has grown to $1.12 million. 12% profit. Perfect return. 6 months later, Client B wants to withdraw $200,000. Madoff pays them using Client A's deposit. Client A gets a new statement. It now shows $1.24 million. They're happy. Client B is happy. Nobody asks questions. Nobody knows the money was never actually invested. Third, the returns were believable. Not too high, not too low. 12% per year sounds reasonable to investors who don't understand the market. But here's the trap. 12% every single year. Even when the S&P 500 crashed, even when the market was down 30%, 40%, 50%, Madoff's fund was always up, always positive.
Why did it last
So long. First, he was trusted. His reputation from NASDAQ gave him credibility. Second, he was invisible. Madoff didn't advertise, he didn't cold call. Instead, wealthy investors heard about him through whispers, through exclusive networks, through their friends. The richer you were, the more you heard about Madoff. And if you were lucky enough to get in, you kept it secret. Because scarcity increases desire.
For 17 years,
This was the entire operation. Money in, fake statements out. Money out, new deposits funding old withdrawals. We call this a Ponzi scheme, named after Charles Ponzi, who ran a similar scam in the 1920s. But Ponzi's scheme lasted 8 months. Madoff's lasted 17 years. 4,900 investors had accounts with Madoff. Combined, they gave him $65 billion, and they received $48 billion in withdrawals. The difference, $17 billion, was pure theft. But the money didn't sit in an account. It was spent. Madoff used investor cash to buy real estate, to fund his lifestyle, to pay earlier investors. It was a perfect crime. Until it wasn't.
when you steal $65 billion,
You don't just hurt rich people, you destroy lives. Steven Spielberg invested in Madoff's fund. His losses? $250 million. Elie Wiesel, the Holocaust survivor, Nobel Prize winner, moral authority of the 20th century, he invested his entire fortune in Madoff. Nearly everything was lost.
Jeffrey Pickauer wasn't just
An investor, he was Madoff's largest client. Pickauer deposited billions. When the fraud was exposed, the government sued his estate. They recovered $7.2 billion, the largest settlement from a single fraudster in U.S. history.
But the worst part?
Madoff stole from charity foundations. Foundations meant to feed hungry children, to fund cancer research, to save lives. Instead, the money went to Madoff's Palm Beach mansion, his 3 yachts, his second family.
Philadelphia Eagles owner Jeff Lurie
Lost millions. Actors, doctors, lawyers, philanthropists, they all believed in Madoff. They all trusted him. And they all lost. Some lost retirement savings, some lost life insurance money, some killed themselves. One victim, Erwin Lipkin, jumped from a 42nd floor window after losing his fortune to Madoff. He left behind a note. It read, "I don't think I can take it anymore." That's the human cost of a $65 billion lie.
For 17 years,
Nobody caught Madoff. Not the SEC, not the FBI, not his own investors, despite clear red flags. In 2006, a financial analyst named Harry Markopoulos sent a detailed letter to the SEC. He showed mathematical proof that Madoff's returns were impossible. He even titled it a Madoff feeder fund fraud. The SEC investigated and concluded, nothing to see here. They were wrong.
in 2008,
The financial crisis hit. The stock market crashed 50%. Unemployment soared. Panic spread. And suddenly, Madoff had a problem. Investors wanted their money back. All of it. Billions in redemptions flooded in. Madoff had no money, no investments, no way to pay. On December 9, 2008, he called his lawyer. "I'm finished," he said. The next day, December 10, 2008, Madoff called his sons to his office. Mark Madoff, Andrew Madoff, successful traders themselves. He told them the truth. There is no investment fund. It's been a lie. The business was one big lie. His sons were devastated. They called the FBI. Within 24 hours, Madoff was arrested at his Manhattan penthouse.
the greatest financial fraud in history,
Ended not with a brilliant investigation, but with a confession. A confession to his own family. A confession that couldn't be taken back.
Madoff pleaded guilty.
He didn't fight it. He didn't claim innocence. On June 29, 2009, at age 71, he was sentenced to 150 years in prison, the maximum. His assets were seized, his house, his bank accounts, his possessions, everything. His wife, Ruth, agreed to forfeit most of her money. She was allowed to keep only $2.5 million. After 50 years of marriage, Madoff's sons couldn't escape the shadow. Mark, the one who turned him in, suffered from depression. On December 11, 2010, exactly 2 years after the confession, Mark Madoff hanged himself in his apartment. His 2-year-old son was sleeping in the next room. Andrew died of cancer in 2013, carrying the guilt of his family name.
Madoff spent his final 12 years in prison.
Inmate 61541. He died on April 14, 2021. He was 82 years old. In his last interview, Madoff showed no remorse. He said he was proud of what he'd built, even though it was all a lie.
His legacy?
$17 billion in stolen wealth. 4,900 devastated investors, multiple suicides, a broken family, and a fundamental question about trust. How do you know who to believe?
The Madoff fraud
Changed financial regulation. New rules were implemented. Custodians are now required to hold investor assets separately. The SEC was reorganized, more resources for detection. But the fundamental problem remains. Trust is the foundation of finance, and trust can be exploited.
Madoff preyed on human nature.
On the desire to believe, on the fear of missing out, on the assumption that if everyone you know is making money with someone, that person must be legitimate. Before Madoff, we assumed the SEC caught fraud. Before Madoff, we assumed Wall Street had guardrails. After Madoff, we knew better. $65 billion, 17 years, 4,900 victims, one confession. This is how the greatest financial fraud in history was built, sustained, and finally exposed. Not by brilliant detective work, but by the simple fact that a Ponzi scheme cannot run forever. The math catches up, the money runs out, and the truth always emerges. Always.